Hi everybody, this is Phillip Guan, CPA. Welcome to classes 12. Today we're talking about the partnerships. So tomorrow we'll be talking about S corporation. And tomorrow will be the last classes for this whole sections. Okay, so thanks for coming. It is a very interesting channel to share the knowledge with all of you. So I'm going to share screen. And I'm going to have Rudy to help me to read the important. Okay, Rudy, can you see it?
Yes, I can see it.
Okay.
Okay,
Is it big enough? Is it big enough? It's fun.
yes, I can tell. Yeah, I can read all this. Okay. So scenarios. In this scenario, you will practice entering the following. First is the partner's information, second, income and expenses, and the third one is the depreciable asset.
Okay, thank you. And there are more information. I'm standing to train you guys. Okay. Okay, here's the scenario information. Okay, could you read it?
Yeah, scenario information, the domestic general partnership, two brothers at law provided legal consulting as their principal business. The business was started on January 7, 2005, and used the accrual method of accounting. The partnership is not required to file Form K2 or K3. The partnership used the calendar year accounting method.
Very good. And then we don't need to read this. Okay, I'm going to move this one to the right side. And then I'm going to do this. I'm going to split the screen. And get this one under free. I have been input this one last week to save times. Okay. So here's the EIN number on the right side. That's the most important thing when you create a tax return. And here's the legal name of the company or the partnership. Sometimes they have a do business as. In this scenario, they don't have it. That's the address. And the phone number, legal service, okay? The code. This one, in order to get this one, you use Shift Control S like that, and then you can search for it. So the basic information, they use accrual basis. Most of the small business, they are using cash basis, but for the training purpose, they say they know accrual basis, we use accrual basis, but most of them are cash basis. GA. And then go down there. Secure questions. The last year. I'm looking for last year income. Let me see. I assume that last year income is 500K. So I'm not going to spend time looking for it. And then this is the address. And then oh, sorry. I was double click. double click to enlarge it. So there's a last on the right hand bottom corner. There's a K2 firing exception right here. You pull it down like here. You need to check this little box because they say it's not required. That's what they say. You see it? Angel, 你開緊車 Angel, is it the other Angel or the other Angel? Angel, if you're driving, don't stay in a Zoom meeting. Be safe. You can watch the recording on the YouTube. Make sure everybody's safe. Okay. Angel, just text it to me in the WeChat group. Okay. This one, that's all you need to do in this tab. If we close it, this is all you need to do for the first tab, the partnership general information. So now in here, oh, I will try to just get this screen like this. Now I find it. Oh, okay, it's this one. We run everything new. Okay. So the partners information, this is the first partner. And we have to get into the second tab. This is general tab. There's a bunch of things inside general tab. We are going back to fill those things later. Now let's go to the second tab. Up on the top, there are many tabs. Do you see it? Anything blue, that means there's some input there. If your old client, more likely they are very similar as last year, Sally. So in here, this one is K1. Double click in here. The one highlighted trends on the left side, that is what inputted in the right side. Let me move this one a little bit in here so that you can see the whole thing. Okay. I already input everything for you. So it's a general partnership. It's individual, it's the domestic partner. If they happen to be foreign partner, then you have to put in foreign partner, whatever they apply. And 50-50 in here. There is a capital account. Now, do not get confused with the capital account and the basis. The basis and the capital account are two different deals. Okay, so the capital account to start with is this. The basis, so the capital account is input in this screen. In the K1 screen. The basis is inside this tab. There are 5 tabs on the top, as you can see. The second tab, basic worksheet, you put 1 million right here. 1 million is 2 columns, right? In front. So you make sure. So this is what you put it in. And number 2, you close this one in here. we just close that tab number 2. In fact, that's all you need to do in this, or you need to, there's no built-in gain. Okay. If I want to go to partner number 2, there is, it's supposed to be this one. It's called light angle. The other partner is called little angle. Interesting name, huh? As you can see, these are all make up name and personal information. None of them are real. So to easy to get accesses is page down. So little angle information is all there. Very similar like what we have for the other one. The only difference is, and this one, they don't sign the tax return, then they don't do this. Just only one person to sign. They're not the running partner. They're not the running means like it happened when it happened to be $1 and then it go to that person. This is like when the IRS deal with the partnership, who is going to deal with IRS. Other than that, the rest of the things, they are the same as far as the capital account as well as the basis, which is like here. So we're done with 2 partners. Now, those are all income and deduction. In the tax return, income is income, deduction. In the professional accounting name is expenses. In the tax return, it's deduction. They're talking about the same thing. Excuse me. Now, income is easy. And this one is just, so income, there are many kind of income. As you can see, 1, 2, 4, 7, all of them. But in this example, there's only 1 million. So we're done. Do you remember when yesterday when we do C corporation, there's some different kind of income. There's interest income, there's gross income. There's also a taxable from insurance. Not all the insurance proceeds for the C corporation is taxable. Some taxable, some don't. And that also applies to individual as well. Like for example, life insurance proceeds for individual is tax-free, income tax-free. Going back to here, deduction. Under the general tab, the 3rd tab. And actually, it's from left to right, from A to E. It's that simple. For example, accounting, start with A, 5,000, and advertise. Normally, I highlight like 3 to 4 of them. And then I work on it. And after I finish work on it, I highlight the others. So that make my life easier and less chance to make mistake. When you highlight many, or you don't even highlight, the chance for you to make mistake is higher. Now, and then the second, and the next one is insurance. It's all kind of insurance. So you need to look in for I under insurance layer. Do you also notice there's no health insurance in here? Now, this is all 3 kind of insurance. The building normal insurance, in equipment insurance, liability insurance, and workers' comp insurance. They will list, but if you have other general, other things insurance, you can put in here. And then the rest of the other things, you just follow what is the name of it, and you find the name and you put it in. If you happen to have the list, it doesn't have it in the JTAG software in the input screen, A to E, you cannot find it. You go here, line 21, other expenses. You type the name of the deduction and you type the amount in here. You can put more than one, and they will be part of that expenses. In this example, happen to be all of them are in the list. So now, in here, the salary is not paying to partner. As you are general partnership, you're not supposed to be paid the partners because your K1 income as a general partnership will be subject to self-employment tax. Also, for the liability standpoint, the general partnership does not have limit liability. So normally for limit liability protection standpoint, LLC is better than LLC partnership. For income tax purpose, if the LLC file as a partnership, you can also file as an S corporation or as a C corporation. Okay, if you use a LLC file as a partnership, they will be also subject to self-employment tax. But if you choose an LLC file as an S corporation, the K1 income will not subject to self-employment tax. That will be a tax saving. Okay. So all the input is in here. So after you input all this, what you need to do is go to the output screen, and green check marks is and everything. Your client will be very unhappy if you misspell their name or numbers. So every single number and every single letter must be double checked. We call due diligence. Like for example, in here, as you can see, I do green check mark everything, and anything changes in here. Full basis. There are two partners. I did this one last Friday after I trained you guys, and I finished all 3 of them. Yesterday one, today's one, and tomorrow's one. So now in here, there's a statement. Inside this statement, right now, according to my, I still can remember what I just saw. You cannot just through memory. You have to check it, really look at. You cannot, oh, I remember, and then check it. You look at the original document and double check every single thing. I was right now utility is correct. Okay. Yesterday I was misused uniform and utility. And sometimes a lot of time it's easy to make that mistake because under you, the next to each other in the input screen. So in here, so now the income and expenses were done. And then we go back to here. Oh, sorry. Here. There is a balance sheet. Balance sheet input is in here. Well, let me show you the balance sheet output first. The balance sheet output like this. Here's the asset portion. Here's the liability and capital portion. As you can see, I green check marked everything. So now, here is the input screen. In the general, under general, under L, on the left side, under L, right here. Like that. You input everything. So now there are more things to do in here. Okay. And then there's an asset. We need to put it in. Asset need to put it in. And here, the third one, the third tab, the third tab. You have to click right here. In the right side, depreciation. Yeah, asset one is conference tables. They bought it a while ago. They have been expenses, section 179. At there. So it's already all use it. Hey, if you using, if this is section 179, here you always say elect this much, allow this much. So that already is a pass, it's applied depreciation. You should not put 20,000 in here. That will double count it. Okay, just one places. Okay. So this input will not change in the tax return 2023, but you still need to keep accumulated depreciation in there. When they show it, the asset need to be recaptures. Accumulated depreciation. So number 2, page down, is a computer. In this computer, they bought it in this year. Now, what's this? It's 45. It's section is Internal Revenue Code section 1245. When I go to master program, the Internal Revenue Code section, when you print it together, there's like about this much. No, there are many books altogether. It's about this long. So we have to study all of them. So I love it. Now in here, there's a date. And watch it out, it's not January 1st, it's January 2nd. Now, it matters. So this one, you have to choose the right kind of depreciation method and also the how long, 5 years. Now, here is also matters. Do you want to use a bonus depreciation or not? And it makes a difference. If you do not override it, the system will going to generate it bonus depreciation, which is going to be have more depreciation. Okay. Face down. It's a laser printer, copy, color laser printer. So it's very similar. It's $500. So the fourth one is a phone. It's a phone server. It's not just a phone. Okay. It's 15,000. You did. You allow it on the depreciation. So it's in here. It's 7 years. You may a little bit confused. Why is 5 years? Why is 7 years? Why 15 years? Why 25 and 27 and a half, 31? When we have an opportunity to learn depreciation, you will notice what kind of the asset is in. In the IRS, there is a list of what kind of asset or how many years in the instruction. Now, this was a copier back in 2018. There are also 179 expenses all. Okay. Do they have 6? Let me see. That's all. I believe that's all. Okay. And then let me show you at this moment. First, the depreciation schedule. Second, the balance sheet. No, This balance sheet eventually will be a little bit different than the finished tax return because they're choosing not bonus depreciation. Like now, let me show you first. In here, we are choosing bonus depreciation. So you bought 5,000, you can take 4,000 first year, and then the other 1,000 you can depreciate it, and you get another 200. This one, the same thing in here. You can 2,500, you can take 2,000, and the 500 you have to over the time. And 12,000, no, 15,000 you can take 12,000. The less the 3,000 you over time. So the bonus depreciation by itself is 18K. That will save the partners more tax if you take more bonus depreciations. So now in here, as you can see, it changed in here. So if you do this, obviously, we change it accordingly, right? Because the depreciation changes. In the original example, if you check the finished tax return, here's how they do. Here's how they do is they put this. The bonus depreciation 0, which means the depreciation will be a lot less. Okay, that's all. I override 3 places. The bonus depreciation becomes 0, so the depreciation will be far less. So in this situation, as you can see, no more bonus depreciation. The total depreciation is only this much. And that was the finished tax return. So this, if you're looking for the finished tax return, the example of what they gave it to you, this is what the finished tax return looks like. Do you see that? Right here. So, and then, but if in a normal practice, most of the client, especially when they are profitable, will take the bonus depreciation, which is going to be like this. They're going to be legally savings tax. Let the signal run. But do it this way, your income is this instead of this. You see, 744K versus 790K. Now there are more questions you need to be answered. Those yes, no questions. Where is those input coming from? Is in here. Let me enlarge this. Under General tab, Schedule B, other information. You need to be answer those. If they're more than 50%, then both the 50% or more, they're both 50%, so they both need to write here. 50% or more include 50%. This question is talking about if both the gross revenue and the total asset less than 250K. It's double negative questions. Not always or no. It happened to be no in this scenario. Yes. There are more in here. Continue. We already, from the K1, the screen, we already choose the first one as a partner to take care of it. So we're good in here. Other than that, we also need to put in here. And 3 days ago, I do this one. Pretty good. We're done. Any questions for this tax return? Only this tax return. Any question? Only for this tax return. This is a partnership tax return. The K1, they're going to receive it. Those are subject to self-employment tax. The self-employment tax. You see it? Yeah. Both partner does. Are you guys so good? No question? I'm going to finish the training. After I stop the recording, you can stay on. You can ask me other questions if you don't want it. If you want to. Let me stop the